So good morning, everyone. You're all very welcome to our session this morning. My name is Geraldine O'Reilly and I work at Clio as a Community and Events Manager. I'm delighted to be bringing you today's event, the third in our year-long Making of a Law Firm series. Starting a law firm is tough and building your firm can be even tougher, especially in times when you can't necessarily meet up or network with peers as you would typically do. So we decided to support the community via a monthly event series that will run throughout 2021 and follow 4 law firm leaders who are on the road to building new and successful law firms. Today, we will discuss one of the areas that is often the biggest professional concern and cost for law firms, and that is professional indemnity insurance, otherwise known as I was going to say PI, as PII. Today and throughout the year, it would be great if you could share your support for the series and for our leaders on social media using the hashtag #MakingALawFirm. Our leaders are kindly taking time out of their busy startups to come and share their experiences with the community, so they deserve a thank you here and there along the way. And speaking of, so today we have 2 of our 4 leaders from the series to rejoin us from this subject. We've got Kim Cross, partner at Vine Law. So Kim is a solicitor who initially qualified in Australia and moved to the UK in 2009. Along with co-founders Melinda Smith and Kath Collins, Kim started Vine Law in 2020 with the mission to build a firm that focuses on providing exceptional client service and is a great place to work. Also, we have Alistair Wells, founder and director at Tend Legal. So Alistair is an experienced commercial solicitor. He co-founded Tend Legal with his wife Shona in 2020 with the aim of finding a better way to deliver legal services to startups and SMEs. Alistair is known for his approachable manner, zen-like calm, and clear commercial legal advice. And our guest for today is Lee Catling, VP Global Professional of Financial Risks at Lockton Companies LLP. So Lee has been an account manager for chartered insurance broker Lockton for over 18 years, providing insurance solutions to SRA regulated lawyers in England and Wales. He has extensive experience dealing with firms of all sizes, from sole practitioners to top 100 law firms, and of all profiles, including niche, boutique, high street, and multinational law firms. So Lee, welcome and thank you for joining us today. So before we get into it, I do want to cover off on a couple of things, a couple of housekeeping items. So today's session will be about 60 minutes in length. We will be recording and the recording will be sent out tomorrow. We want lots of Q&A, so please use the chat function and the Q&A function to get your questions into our panelists. So use the chat function and select the drop-down panelists and attendees if there's something you want to comment on that was mentioned in our session today, or if you want to engage with fellow attendees and for them to see your questions. If you just want to submit questions for our panelists, do use the Q&A function for that. So ask lots of questions, get them in early, and we'll pull them in throughout the session. Brilliant. So as mentioned, I work at Clio, and I wanted to recognise that this session is being hosted by Clio, and many will have joined this webinar to learn a little bit more about our cloud-based case management solution. We won't be going into a major amount of detail. It might come up throughout the session, but for those of you who are interested, I'm just going to launch a quick poll and just let us know if you are interested in learning more about Clio. We'll get somebody from our team to follow up with you. It's pretty self-explanatory. Yes, no, pretty much are the answers, and we'll have someone from our team follow up with you. Whilst that poll is running, I do want to highlight some very exciting news that some of you may have spotted yesterday. It was an announcement that was made yesterday around 2 o'clock. But Clio announced our new valuation of 1.6 billion USD after raising 110 million USD in our Series E funding round. So this investment signals a historic moment in the growth of legal technology, with Clio becoming the first legal practice management unicorn globally. What does this all mean for you? Well, we will use this funding to further invest in our platforms, strategic acquisitions, partnerships, and that are aligned with the company's mission to transform the legal experience for all. The funding will also expedite Clio's plans to grow its workforce for the UK and Ireland in 2021, with a focus on bolstering our product and engineering teams to continue innovating and evolving our product offerings. And we also have been working with the Law Society of England and Wales and are approved suppliers for the Law Society of Scotland for a number of years now. Relationships we work hard to maintain, demonstrating our investment in transforming the legal experience within the UK. So I'm going to close our poll now, and we'll close that now. And back to our topic of discussion. So much has been said about how tough the PII market is, particularly over the past few months. An article just this week in the Gazette was titled "Enough is Enough," referring to large increases in premiums. And the Law Society has also predicted that the market is the hardest it has been for 20 years, with most premiums increasing and it becoming tougher for some firms to get coverage, even those established firms that have been around for a while. So how are new firms supposed to get coverage? The overwhelming conclusion has been not to leave it until the last minute or the last month to look for renewal or to start looking into PII. And I'm delighted and thankful to welcome Lee to our discussion this morning, as he's going to explain what PII is and talk to some of the reasons why the market is the way it is and what we can expect in the coming weeks, months. So if you're ready, Lee, I'll hand over to you.
Thank you, and thank you for the introduction, Geraldine.
You're welcome.
So basically, I've been granted a couple of minutes to just go through some slides, just to sort of go through how best to prepare for your renewal. If you're starting a new business, what you need to be looking out for, a brief overview of the current market and what our perception is for the future. But firstly, on the first slide, I'd like to just sort of go through what the professional indemnity really does and what it is, and possibly sort of give some context as to why I feel that the market is as it is, and the reasons why it's quite an expensive cost to the business. So just starting on the first slide, and forgive me because obviously we'll have people that will know all of this, but obviously for people that are looking to start up, they may not. So this may be of interest to them. But the SRA minimum terms and conditions is pretty much the governing policy for all law firms in England and Wales. It's a as it says, minimum terms and conditions. It's ultimately a policy that's been written and enforced by the SRA, not by the insurance market. And it's provided to firms, whether it will be Magic Circle law firms or sole petitioners. So there's very small scope to bespoke a policy in line with the risks that particular firm may pose. So that is one of the frustrations which the insurers are seeing. Moving on to minimum limits, standard limits are 2 million any one claim for partnerships, obviously including sole petitioners, but obviously 3 million for recognised bodies, which would include limited companies, LLPs and ABSs. So that's where the compulsory element sits. Obviously, there's excess layers that sit on top of that, but it's dependent on your own risk profile. We'll tell you whether you need top-up cover, but we'll come to that later. Any one claim, excluding defence costs. Now, the policy is ultimately unlimited in regards to the amount of claims that it will pay. So, taking the above point, 2 million for partnerships, insurers pretty much have to cover you for a total of 2 million every single claim. So if you do have multiple claims, it can be quite expensive. That doesn't include defence costs as well, and with the current environment, defending claims, especially due to the complexities, can be very costly to insurers as well, and that doesn't erode the limit to indemnity. So that in itself is unlimited once again. All civil liability now, the way that the minimum terms and conditions are written is pretty much there's not many exclusions within the policy. Now that is for consumer protection ultimately, but also it gives you that sort of gold-plated coverage for your firm. But all civil liability pretty much covers all third-party loss, apart from a few exclusions here and there. So there again, insurers are having to with every single year, new risks come to the fore, and they have to obviously include that within the existing policy. And it has developed quite a lot in the last couple of decades. So it no longer just insures firms for their legal advice and negligence within that. Claims made policy, again, this is pretty much significant when it comes to new law firms, because ultimately you're insuring your policy, you're renewing your policy for the next 12 months, but ultimately, because it's a claims made policy, as you move on into the business, insurers are ultimately not insuring you for the next 12 months of work, they're insuring you for the 12 months you've done before and prior to that, until obviously any limitation period can be expired. So that is a consideration, and that's possibly the reason why premiums tend to go up when you're a new firm going from there. But again, I can elaborate that on in that a little later. Participating insurers as well. There's not an endless amount of insurers that would typically insure lawyers. It's not the case of walking into Lloyd's and just sort of putting your hand up to see if anyone wants to insure a law firm. You have to prescribe to the qualifying insurer agreement. Again, one of the restrictions that the SRA have put in place. You have to ultimately, as an insurer, have to sign up to the minimum terms and conditions, and you have to obviously provide certain rule-based parts of cover. So again, the pool of insurers is not vast and it's restricted. Ultimately, if you look on these list, the SRA website, there is a total of around 36 names on that list. Ultimately, there's only 22 that are active, but when you sort of also break it down, there's only around about 15 insurers that will ultimately provide indemnity cover to yourself. And again, that's segmented in line with what sort of segment of the market they want to participate in. One-off clause as well, that's a significant part of the coverage, and certainly it's been highlighted in recent years in relation to firms that pretty much abandoned their firms, not paid their runoff, but insurers have had to cover them for the 6 years of runoff. So ultimately, if you buy a policy, then it's inbuilt into the policy whereby insurers have to pay or have to cover you for 6 years post closure of that firm, irrespective of whether they get paid the premium or not. So very onerous terms on insurers to do that. So there is obviously a significance there, and also as well there is a cost to you if you do choose to take runoff, which can vary from about 150% to 350 plus %. So that's a consideration. Can I have the next slide, please? So overview of the market. We are, if you can see that as a clock face, we're at 9 o'clock at the current stage of the cycle. Unfortunately, we're in a hard market at the moment. The advantage is it is cyclical and it will move eventually. We've seen progressive increases in the market over the last 18 months. We're just due to release reporting on the April season just gone, but overall figures are telling us that we're looking at on average around about a 27% increase in premium for that season just gone. That's up from about 17% from October last year. So, and we are not expecting to see any signs of recovery just yet. But obviously we are doing our very best to try to bring capacity into the market and hopefully provide some better solutions for our clients. So just quickly on this slide, obviously it's a cycle, pretty much. As you said, Geraldine, Law Society reported that it's the worst market in 20 years. Now, take the last 20 years has pretty much been sitting at around about, you know, the 3 o'clock mark on the other side of the cycle. So what we can say is the fact that the soft market is a long period of time. Pretty much we've worked from 3 o'clock all the way to 9 o'clock in the last 18 months. So when it moves very fast. But the history tells us that it will be a hard market for a short period of time, and then eventually a longer period for a softer market. So there is encouraging signs that it will recover, but at the moment we're not quite there yet. So that is the first slide. Can I have the third slide, please? Okay, so how best to prepare? Obviously, we'll come to that in the Q&As as well, but just to roll out quickly what's within your control. Now, whether you're looking to renew or you're looking to start up a new business, I would encourage anyone to start early. Now, a lot of people leave it late, of which brokers are and insurers are under a huge amount of pressure to get things done in the sort of short time span that we're in. Now, obviously, COVID and the pandemic has caused even further delays. So I would certainly sort of look to start early and try to get all your preparations in and your presentation together to obviously draft and get into a good shape to be able to present to insurers. Quality presentations to insurers, it's a must at the moment. We see all too many times where we pretty much get given just written short forms, questions unanswered, unsigned proposal forms, no real quality about them. And the problem is that insurers they have to look at everything, and if they don't feel that it's adequate and it's creating a good impression, then they may sort of move to the next one. So you are effectively, by not putting the time in a good presentation, limiting your options. As far as new startups, robust business plan. Obviously, you need to go through all the motions. We do actually have a new startup guide that we can certainly circulate at another time, but that gives some sort of quality advice as to sort of what you should be putting into that business plan in order for insurers to consider your insurance. Solid financials and forecasting for new startups. Again, insurers are looking at the runoff conditions and the solvency of existing law firms. So we need, they want to see firms that are in profit and sustainable. As far as forecasting is considered, obviously it's a new business. It's very hard to budget or forecast on what ultimately you're going to end up doing in the first 12 months, but just be conservative, don't overdo it. Insurers obviously will look at that and take that into consideration, but there needs to be some facts behind it, sort of clients that you're looking to go after, sort of billing that you're looking to push forward. So those sort of things you should be looking at. Practice good risk management. Obviously, good risk management is found in so many ways within a business, and obviously there's these prescriptive risk management questions that we get in every proposal form, but also it's the outside information that we're looking for, where firms pretty much adopt a particular ethos in good risk management, and they can demonstrate that very easily, whether that be through case management systems or good supervision. But we can elaborate on that for forever, pretty much. Attention to your shopfront website again. It's pretty much a window into your business. Ultimately, websites as well are very much something that insurers are starting to look at a lot more as well. So just be careful on what you publish on there. And select the right representative. Now, obviously, there are a huge plethora of brokers out there, but there's only a finite amount of insurers. So we don't want to be sort of in a situation where you've got a huge amount of brokers approaching the same insurer. It's just going to aggravate the insurer and ultimately possibly lead to them not writing your business. So it's, and I know it's hard to find the right representative, but there are tips there that you need to be considering, and ultimately we can come to that later in the discussion. But you just need to obviously ensure that the broker has market direct access to insurers, and they have plenty of options for you, and to be able to look at your business in the profile that it represents, and be able to give it to the right insurer that's looking for that type of firm. So it is a bit of a difficult a decision to make when talking to brokers, but there are obviously there's quite a lot of considerations there before you step into that. And that is me.
Brilliant. Thank you very much, Lee. Really appreciate that. I think it really sets the scene for the next part of our session, which is going to be the discussion. We've had some questions coming in here, hot and heavy, and Kim and Alistair, I'm gonna pull you in now as well. So if you want to unmute yourselves. So just a reminder to folks, if you do have questions, please do use either the Q&A or the chat function. And if you're using the chat, select panelists and attendees, and fellow attendees could answer your questions, as we're also aiming to answer them live. So I'm going to actually stop sharing my screen so that we can all see everybody in gallery view. So if you want to, you can switch over to gallery view rather than speaker view. And what I would like to do is come to you, Alistair, and I have a couple of questions around, when looking back, both yourself and Kim, you're about 6 months or 5 months into your firm, but looking back at this time last year, or even before or after that, just before you started your firm, how early did you begin preparing for and then applying for PII?
Well, it was a bit of an eye-opener for me. We were due to start, when we did start, on the 1st of December last year, and I'd started thinking about it 6 months before. And I hadn't really realized. I mean, I think my focus was more on getting SRA authorization for the firm, and then when I looked into that, I saw, well, you have to have PI cover, which I kind of assumed would be easy. So but no, I did make contact with the broker around 6 months before we went live, which was good, because then, you know, he explained to me what we needed to do, and I could get going with preparing all of that.
And how did, when you were looking for a broker, doing your research, where did you go to? How many folks did you reach out to? It was someone I already knew, the broker who'd insured my last firm. So I went to them, and you know, they were a good broker. It was Hero Indemnity, and yeah, so he and the broker, I think once we'd put together our application, I think he applied to 3 different insurers who all came back with quotes. And Kim, you'd mentioned in our previous call that that you put PI up there with the SRA regulation, and there was a third thing that you put up there. I think it was around funding.
Funding. So it was like the 3 things go together. So they were the very first things that were on our list, and you know, you can't have a firm without those 3. So it's like, and they all tie in together. So like Alistair was saying, you can't get the SRA without the insurance, and you can't get the insurance with it. So all three of them were the first things we looked at.
And all three together. Was that the same for you, Alistair?
Yeah, at the same time, yeah.
Yeah, they are. Yeah, they're absolutely all interlinked, and it kind of gets tricky because you're thinking, well, I've got to put together these forecasts, but I don't know how much my PI cover is going to be for that. So we just have to, you know, you have to work with sort of provisional figures or at the start, and then as you go, it gets shored up. And we found, you know, we got a quote, I think by September or August, September, we had a quote. But then, of course, you have to, that only lasts for 30 days and then you have to renew. So we're getting the quote refreshed as we got closer to the time. So it's kind of that period. I remember it being slightly tense in that you're not quite sure what's going to happen with all of these things until you've actually got your cover and your SRA authorization. But it did all kind of come together right at the end.
And you mentioned something there around forecasting before. And I imagine that it's something that's very difficult to do given the firm is not established. So how did you go about doing that? And I'll ask you, Alistair, first, and then come to you, Kim.
Yeah, I mean, I think I started quite early on when we were first talking about this idea of starting a firm, because for me, that was a way of working out, well, is it even possible, was to, you know, I had this spreadsheet and just did loads of research about, well, what are the costs for everything? So look at, you know, your software packages, you know, what might PI cover cost, look at phones, everything, office space, meeting rooms. And just, it started out just like that, just a spreadsheet. And then I kind of elaborated on it a bit and divided it out into kind of startup costs and monthly costs for the first year. Started thinking about, well, what might the revenue be for the first year as well, and it sort of took shape over time.
Kim, was it the same for you? Is there anything else that you looked at?
Yeah, I mean, forecasting was really hard, and I think we were the reverse. So we kind of just wanted to do it, and then once we were sort of set on doing it, then sort of sat down and went, okay, well, what's the figures? And I remember the first time that me and my business partner, talked about forecasting, and we sat there with an empty piece of paper, and I just thought, well, I don't know, how am I supposed to work out how much we're going to make? And literally it came down to like thinking, okay, what hourly rate are we going to charge? How much work do you think that we'll get in the first month, the second month, the third month? What kind of work do I normally do on a fixed fee? What would that fixed fee be? How many of these sorts of fixed fee work are we going to do? And then sort of adding them up, and that's how we did it, and then working out, you know, what the cost might be. So yeah, really, really bizarre thing to sit down and do, particularly for someone like me who wasn't, you know, I wasn't a partner in previous firm. I wasn't involved in any of that sort of thing. So it was new for me to do that sort of thing. So it was interesting.
So I just mentioned, sorry, sort of, so turnover is obviously quite a consideration when it comes to working out the professional indemnity premium. And certainly new startups is something that I think insurers even sort of scratch their heads on, because of the fact that you know, you're coming across saying, well, we haven't actually done this work yet, but we are projecting that we're going to be doing, say, you know, $250,000 in the first 12 months. Now, I've had it where a law firm has started and they've posted about $1 million, and come renewal, they've turned around and go, oops, I've had a really good year, you know. And it's difficult to then explain, well, you're looking at maybe 4 times the premium. Now, ultimately, it doesn't always come to that, because insurers can sort of, you know, they use their ways to be able to mitigate that increase. But ultimately, when they look at a law firm, one of the sort of the barometers of working out what, you know, how to adjust risk is ultimately turnover. So they have to start at one place and build as the firm sort of progresses. So it's important that we sort of kind of get it right, but you shouldn't fear that the fact that, well, if I get it wrong, then I'm going to be persecuted with premiums. Insurers are there to help, ultimately. And I think, you know, and there's going to be an element of I suppose, allowance in those forecasts anyway, but you have to be realistic to a point, and maybe sort of try to, you know, keep insurers informed as to sort of the performance of the business before you hit that renewal, just to try to sort of manage the insurers that you know, before they obviously put pen to paper and alarm everyone ultimately.
Yeah, that was one thing that we found actually, when I think our initial forecasts were too ambitious. Basically, I think we'd kind of anticipated taking more people on more quickly, and or, you know, having more work, and so one thing we found, we got the initial quote, and then as we got closer to the time, we realized that actually our figures we weren't going to take on as many people as quickly, and we revised our forecast down. And that was, I remember the discussion with the broker, and he kind of said, well, look, if you're going to do it, you have to make sure that you can explain why you're revising these figures, because you don't want it to look like you're going back to the insurance saying, oh, well, the premium's too much, we just want to get the premium down, so we're just going to, you know, say it's a lower forecast. And so I think, you know, the advice would be try and get it right first time, and in the end it was actually fine, and our premium did come down quite a bit as a result of doing that. But it was again, it was one of those things that I was slightly nervous about how they were going to react.
Another thing that I experienced, so I think, and this ties in a bit with imposter syndrome, Geraldine, that we're going to talk about in another session, that when we sat down to do these figures, you know, in my head, I'm just like, well, who's going to pay me for anything? And I didn't want to put, what am I going to do in the first month? Where am I going to get work from? And how many, like, how's that going to work? And so you're kind of afraid of putting small numbers in there, because you think, if I put sort of relatively conservative numbers in there, does that mean that it's not going to work, or that I'm going to you know, so that's a challenge as well for your confidence and being realistic as well, I think.
Yeah, definitely. It feels like you're damned if you do, you're damned if you don't. Kind of a situation. Kim, would you feel that since now you're almost half a year through your firm, that you feel a little bit more comfortable on that?
Yeah, a lot more comfortable. So just immediately, just having done it, having started, confidence, it just went through the roof. And I know that we can do this, you know, we work well together, and we do a good job, and people come to us. So and our forecasts were pretty much bang on, I think. Yeah, a little bit more expenses than we anticipated, I think, but not very much. But the test is going to be later on. So, you know, sort of in the lead up in the first 6 months, you're sort of finding your feet, and then by the time you get to 6 and 12, you think, well, you know, I'm a bit more established now, and I'm getting my feet under the table and all that sort of stuff. So what happens now between 6 and 12 months is really going to be the kicker. That's what we're watching.
Thank you, Kim. I want to pull in a little bit of questions around risk management. We've got a couple of questions coming in the chat around it. But Lee, coming to you, how do you feel that a law firm's views on risk management might differ to what insurers' views might be, and potentially what might some misconceptions or crossed wires be? And is there some tips there that you have for firms, whether they be new firms or whether they're established firms and they're not covering something that they should be?
Yeah, no, it's fine. Look, I think insurers and law firms' views on risk management should be aligned ultimately, and I think more so for law firms to sort of understand the risks within their own business. There is an element of reliance from insurers as to sort of relying on the fact that, you know, law firms are going to get it right, and they know what to do and how to get it right. Now, obviously, the law advice is, I don't think, ultimately a problem for insurers. it's more the systems, it's more the compliance, the procedures that lead to the claims ultimately, and they are simple things like sort of bad diary systems, bad supervision, not dotting the I's and crossing the T's. So it's this sort of it's the stuff that links it all together that falls down for a lot of firms, and so when you look at when you look at the processes and procedures, you need to make sure you adopt all the all the right sort of checks and balances, and proposal forms, as long as they are, and that's probably the second most sort of issue with dealing with PI. They're there for a reason, and they're almost like a risk management tool in themselves. The fact that no one likes filling out forms, but ultimately the questions within there are sending out pretty clear, very clear clues as to what insurers are concerned about. So when you see a question asking about diary systems or peer or partner-to-partner peer reviews and stuff like that, you've got to ask yourself the question: why are they asking that? Has there been issues before? It's a bit like road traffic accidents on the roads. What you'll find is if you see a speed camera on a road, it's usually an indicator as there's been an accident there. So it's a bit like that on a proposal form. When insurers start changing their line of questioning, that tells you that they've got a concern in that particular area. So that's what you need to be paying attention to.
And Kim, coming to you, when you were first applying, is that an area that, did you focus on? Is it something that you realize now, and when you're going through a renewal? And similar for you, Alistair, is it something that you'll highlight a little bit more?
On the form, you mean?
Yes.
I mean, in terms of sort of compliance and all that, so we really we've built that in from the start. Maybe that's because we are in a hard market, so it's something that you're thinking about, that people are thinking about a lot, and we had the SRA changes as well, and like last year or the year before, so it's something that's talked a lot about, and they all tie together. So for me particularly, I wanted to set this firm up from the ground so that the system is all there for anyone else who comes in, so that everything is built into the system and the way that we work, so that compliance is embedded. Does that make sense? So we use Clio a lot for that. So having workflows and having a guide that people can follow, like this is how you should do this sort of matter, and everything is there for people, and the compliance is built in, so there's nothing missed. So I think what I don't like is situations where you've got people who perhaps aren't sort of trained well enough in it, or thrown into the deep end, and they don't get necessarily taught all the things that they should be doing, and then they hear all these horror stories about claims and things that have gone wrong, and it just creates a lot of anxiety, I think, for lawyers as well. And so the reason for building the compliance in has a lot of functions. So part of that is from the SRA compliance point of view, part of that is for the insurers, part of that is to make us better lawyers, part of that is to make our lives easier, part of that is training, and a lot of it is looking after our mental health. So for me, all of those things are connected.
Thank you, Kim. And Lee, is that something, like even something, putting something down on your your renewal application, or your initial one, saying, I plan to use Clio for my case management? Could that help, like move you along?
Absolutely. It's the proposal form is the minimum that you should be providing to your insurers. Don't feel that if I expand on anything, then that's going to lead to more questions or concerns. The insurers they're going to pigeonhole you if you only stick to the basics. If there's something different about you that you can demonstrate that you are better risk, then put it down on paper, and insurers will take note of that, and hopefully that will benefit you in ultimately the offer of insurance. But the case management systems, obviously, It's not for everyone, but for a lot of firms, it's a huge element to the business's procedures. But whether that be sort of improving efficiencies or to prevent, ultimately mistakes, it has its place in a lot of law firms. So yeah, it's also for you to sort of demonstrate as to what this case management system does and how it does benefit you from a risk management point of view, because you can't assume that insurers are fully aware of all of the case management systems, and certainly obviously from Clio's perspective as to knowing what Clio can do for the business.
Okay, thank you, Lee. I think we've covered quite a bit there on risk management, but if there are any other questions, please do pop them into the chat. I wanted to now cover or jump to something that, back to your presentation, Lee, and something that stood out to me as something that I hadn't considered, and that's the website. And we're in a digital world, even though we're opening up and lockdown's kind of easing a little bit, there's still a huge emphasis on digital, and in a remote world the website has become shop front window, but a lot of people would think, okay, your website's for your clients. So I thought it was very interesting when you pointed out that no, insurers and brokers are going to be looking at your website. Could you elaborate a little bit more on that?
Yeah, sure. So yeah, it's only happened sort of last sort of 5 years or so that the insurers are no longer just looking at what we're providing them. They're looking on the internet. That can obviously start with their websites, but also as well these review sites as well, just to sort of see what's sort of service that other people are getting. Now, obviously, with some you've got to take with a pinch of salt, and insurers are not going to look at every single case and think they're genuine, but they are looking further afield as to what the perception of these firms are. But as far as the website is concerned, they're looking for areas of the business that there's not ultimately being reported on the proposal form. So if you're saying that you're doing, say, personal injury on the website, but you don't actually do personal injury on the proposal form, then they'll question as to what is this in a new area that you're going into? Is this an area you're coming out of? So it's going to generate more questions coming from the insurers. Also, as well, I've found in the past where someone's website said that they have multiple offices around the world, and they've got a sort of an overseas presence, and it hadn't. Once obviously we spoke to them about it. So it's really sort of the perception is what you give. We all obviously trying to market our business and trying to sort of pull in clients from all sorts, but you've just got to make sure that your insurers will be looking at those as well. So questions can come out of them. As far as yes, that's the website. Obviously shop fronts as well, obviously taking ourselves away and back to sort of that sort of kind of high street. Underwriters have looked on sort of Street Map and actually sort of plonked themselves virtually on the curbside to look at the actual firm to see in what condition it is, and that can be something that they look at. So you've just got to be aware that insurers are looking at more than just the information you're putting in the proposal form.
Thank you, Lee. And one thing I think you'd mentioned on a previous call was around including accreditations and policies and processes even openly on your website for insurers to see, and it could actually be helpful for clients to see some of those things as well. Kim and Alistair, I'll come to you. How important has your website been and the online presence over the past few months?
I mean, the website for us generally has been really important because, I mean, we don't have a permanent office. That is our shop front. We didn't have it. It didn't really impact our PI application. We didn't have the website up at that time we made the application, but certainly from a general sort of business point of view, it's been huge. But that's quite interesting to hear what you're saying, Lee, about that the insurers can look at that. And I think it's interesting. I mean, one thing that's occurs to me, I mean, it sounds like it's more like the application for insurance feels like it's more like a pitch to an investor, in terms of there's an element of sales to it, isn't there? I mean, it's really presenting that your firm in the best light from a risk point of view, but also from a profitability point of view, I guess.
Yeah, absolutely. I've actually got this written down. One of my first points was the fact that, this is how you should be looking at presenting to insurers. Treat them as your investor, because ultimately they're invested in your business. So why would they want to invest their 2 million or 3 million any one claim risk for a firm that they don't really trust, or in the fact that they're not going to produce claims over a certain period of time? So you're very right, Alistair. You need to kind of accept them in and work with them to obviously try to get the best deal for you.
Yeah.
Thank you, Lee and Alistair. I'm going to pull in some of our questions now. Conscious we have 15 minutes left, so I know we've covered off on some of them, but so it might be a little bit more quick fire on those. So I'm gonna come to Loretta, some of Loretta's questions here. So Loretta, renewing in October, do we need a business plan and forecasting? This will be our 3rd year trading. So Lee, going to put that one to you.
Not necessarily a business plan. If you're already trading, then obviously the information within the proposal form is enough. Just I'd say just the executive summary, just to sort of explain the softer parts of the business, how you're performing. Obviously, if it's 3rd year, you're still quite new as a business as well. So just a little bit about how you're progressing, but you don't ultimately need a business plan when you're an existing business.
Okay, thank you, Lee. And another one here from Loretta. We're a sole practitioner firm. Our PII last year was £8,500. I assume that is totally excessive. Yes, no, maybe.
Who knows? It depends what work you do. There's high risk areas and there's low risk areas, and obviously high street law firms, complete mixed bag. So it depends what the income is. It depends what the type of work you do. It depends if you had claims. So I can't confirm whether that's excessive or not, but on average, it sounds a little bit high.
Okay, thank you, Lee. Question here from Teresa. Why is the solicitor indemnity insurance so high in comparison to the insurance that barristers or silex have to take out? I understand it depends on work area as well.
Yeah, I'd say so. Obviously, the biggest generator of claims for lawyers by far is conveyancing, property exposure. I'm expecting barristers don't really sort of get involved in that area. I couldn't really sort of confirm exactly why there is such a disparity between the two, but I do think that lawyers, the breadth of cover it must be far wider. And the breadth of business that they conduct is far wider. You've got client accounts as well, which contain millions and millions of pounds, and they can be under attack. So that the risks are far greater, I believe, for solicitors in private practice.
Thank you, Lee. At this point, I'm actually going to launch a quick poll that we had set up just for the attendees on the call. So feel free to participate. So just to get a gauge of, are you expecting your premium to increase, decrease, or stay the same? So if you could take part in that would be really appreciated, and I can share the results here. So we've got about 30 or so have voted. I'll leave that running for the moment. Another question here from Mohammed. Could you please comment about the backstop of the extended policy period, which requires a firm's current insurer to continue to provide cover for an additional period of up to 90 days? But there are go ahead, Lee. Apologies.
Yeah, so no, that's fine. So this is for firms that have found it really difficult and not found insurance within the normal time frame. So it's kind of a default position whereby it's offering pretty much consumer protection, and giving a lifeline for a law firm to be able to sort of try to find a PI for another 30 days. If you can't find it after 30 days, then you have a further 60 days to effectively wind down the business and close your doors. So that's 90 days in total. It's not a commercial market. If you fall into that, I think it's called EPP. You've got to have a very good reason why you're there, and a very good reason to obviously put forward to insurers as to why they should insure you going forward. So that's the position as far as that's concerned.
Okay, thank you, Lee. I'm just going to end our poll, and I'll share results. So we've about 54% saying they expect it to increase, 8% decrease, 15 stay the same, and quite a chunk are just not sure. Okay, I'll stop sharing that. And we have another question in here from Jonathan. What is the insurance market like for the new breed of freelance solicitors? Is the number of insurers fewer?
Unfortunately, it is. It's still quite new, and there's not a huge amount of freelancers out there to sort of effectively give enough to the market to make a go of it. So there's probably only a handful, if a handful, maybe a couple of insurers that are looking to insure freelancers, but yeah, I don't really have much information as to how well that's going, but I believe there are few options for freelancers.
Okay, and just on that, on freelancing, so that would be potentially working with as a consultant for another firm. That firm wouldn't have to cover. So for those firms that are following the consultancy model, which there has been quite an increase in those firms.
Okay, so freelancers in their entirety, if they're a freelancer, they're looking for insurance for themselves, that's where the market's restricted. If you are a freelancer that are looking to obviously work on behalf of another law firm, then by all means, it simply is the case of you work for that law firm's PI picks up your indemnity, and that's automatic. You know, they would be defined as an employee under that firm. So, and it's for that firm to contract on that basis. So that's a fairly innocuous way of performing legal services without the need for your own insurance.
Okay. Thank you, Lee, and thank you for bearing with my quick fire questions there. If folks have other questions, please do pop them in. We will endeavour to cover them before 12 o'clock. I wanted to now come back to Kim and Alistair, and looking at your renewals and reapplying for PII. Have you started to prepare for your next year of cover? Is this webinar your initial start in preparing? Kim, come for you first. I can see you smiling.
Yeah, probably I think in the process of everything that you've got to do when you're starting, and because there's a lot, you tend to forget about it. Like, you've got it, you're there, you're ready, and you just think it just goes to the back of your mind because you've got a lot of things. But in the process of preparing for this and doing this, it's something that just jumped back to the top, and I think back to what I was saying before, that it should just be always there. So we, you know, after a little bit of worry and thinking, oh, what should I do, actually it's all there anyway, so we built it in. So I think the answer to that is just always, because what you don't want to do is get to renewal date and go, oh, I haven't done this, or I haven't done that, or I wish I'd done this. You know, so if you always have that renewal date in mind, then you're fine.
Yeah. Alistair, is the same for you?
Yeah, I mean, we haven't started thinking about next year's renewal yet. We've got a bit of time, but I think we probably, following today's conversation, I think we probably need to start getting going on that, and putting together. I think I've got an idea of how to approach it, and more going down that line of viewing it as a sort of pitch, and really not just a form filling exercise, which is really helpful. So yeah, thanks Lee for the tips.
Lee, is there anything that stood out? I know your Loughton's are still kind of putting together the trends from in March and April, that huge window of renewals. Is there anything that stood out that folks could start looking at, preparing?
Yeah, I think firms that typically do sort of high risk work, I think it's more about what we've seen over the last few years is that insurers are more interested in their clients rather than them, because ultimately it's the clients that will be coming to claim against the firm. So I think that there is a real sort of culture shift on the fact that severity has become a big issue for the market. So whilst claims are, the volume of claims are down, the actual costs of claims have gone up quite considerably. So insurers are paying more attention as to, you know, the sort of the values of transactions and everything else around that. So you just need to be aware that if you do have some sort of kind of high net worth clients or commercial clients that, you know, or litigation that you're involved in that is of high value, then you need to sort of be able to articulate that to insurers to kind of almost say, look, although this is high, the risk of a claim is very low, but you've kind of got to just, you know, put pen to paper and try to, you know, articulate that to underwriters.
Thank you, Lee. We do have a question here, and apologies we didn't get time to cover on this a lot in today's session, but it's around cybersecurity cover. And if so, are there any PII products that include cybersecurity breaches?
That is very topical at the moment. When we say cyber to a lawyer, ultimately they think about the sort of the client account money being siphoned by some cyber event. At the moment, the compulsory element of the policy does not exclude any sort of cyber related risk, although that's possibly under review for the future. Excess layers obviously starting to adopt some cyber affirmative language to sort of dissect ultimately what is a professional indemnity claim and what is a cyber claim. But most cyber policies are sort of kind of first party type policies, which will protect you as a business for costs of data breach and everything else around that. So I would certainly encourage law firms to look at cyber as an additional policy for their business. I think we're slow on the uptake, but we always follow the other side of the pond. US counterparts, you know, they are all buying it because it's a considerable risk for them, and I think, you know, we'll eventually catch up with them. So it is something you need to start looking at, I think.
Yeah, thank you, Lee. We have 1 minute left, so I'm going to put another quickfire question to all three of you. What is one recommendation you have for firms either applying or for the first time or renewing? So, Alistair, going to come to you first.
Okay, the easy one. Do it early. Start early.
Okay, Kim.
Have a good relationship with your broker and your insurer, and keep that conversation going. So Lee was saying that earlier. You know, if you can build that relationship up, if you know each other and you know what you're doing and what you're like, what your attitude is to risk, and how you run your business, that can only help.
Thank you, Kim. And Lee.
I'd say just really open up to your broker or your insurer. You know, lift that bonnet and let them know exactly what you're doing. I think that will be an advantage, and it won't be a disadvantage in any way.
Brilliant. Thank you, Lee, and thank you, Kim, and thank you, Alistair. I'm just going to share my screen very quickly to close out today's session. So can everyone see my screen? I know sometimes Zoom can jump off. My screen sharing right now.
Yeah.
Slides, brilliant. Okay, so just a quick note that we have our Clio Cloud conference is coming up in October. So if you did enjoy today's session, we will there'll be lots of this and more in our event October 26th to 29th. So tickets are for sale for that. It will be virtual. There'll be lots of really brilliant keynotes. Full three, I think it's 26, 29, so 4 days of content from all across the world. So we'll share a link with you for that. And finally, I did want to also mention a thank you to our panelists today. So Kim, Alistair, Lee, really appreciate you taking the time out of your day for today's session, and really appreciate it. I know there was lots of questions that we didn't get to, and so apologies for that. You may have some more questions coming in over email and over LinkedIn, but really thought-provoking content, and I hope folks found it helpful.
Thanks, Geraldine.
Thank you.
Thanks very much.
Thank you.